Welcome back, financial investors. My name is Brent, and today we're going to be doing our weekly recap, going over the three main indexes: the S&P, the Dow Jones, the Nasdaq. We're also going to be looking at the M1 Finance, Roth IRA, and taxable account performance over the past week, looking at what stocks paid out dividends, and then kind of getting up to speed as far as where our portfolio is currently at and what dividends we received in September and October, because I haven't made a whole bunch of videos covering our 1 month recap for September. So I figured today would be a really good day to kind of just do a quick recap of that. So that is what we're going to be covering in today's video. If you have not yet subscribed to the channel, I would highly appreciate it if you do hit the subscribe button below. If you do enjoy this video, find it helpful, hit the thumbs up. And if you have any comments or questions going over this video, the stock market, or just anything in general, drop it into the comment section below. And let's go ahead and get into the video. So this week, we currently have the S&P 500 performance up 1.22% for the 5-day change. We can see here that we are breaking almost to some new all-time highs. We did close slightly below the all-time high there of 30.28, so we are just 6 points below. A lot of investors are believing that next week we will be breaking highs. Right now, Friday, it looked like it was going to be breaking some new all-time highs, but investors were a little bit cautious going into the weekend, so they took it, and the market just kind of cooled off towards the end of the day, and that is why going into next week, a lot of investors believe that we will see through the progression of next week that we will see some all-time highs at some point next week. So right now, S&P 500 is up currently 20.57% year to date. Jumping over into the Dow Jones, basically the same performance here on Friday, kind of simmered there towards the top, didn't quite break, and then kind of calmed down for the end of the day. And again, a lot of investors are believing next week the Dow Jones will break to some new all-time highs. The Dow Jones right now is in third place, following the Nasdaq in first at 24.23, the S&P in second at 20.57, and the Nasdaq at 15.56% there. So Nasdaq, as we just kind of covered, is the winner currently as far as year to date, up 24.23. The 5-day change up 1.9. Dow Jones, I kind of missed that, 0.7. So as far as the weekly change, the Nasdaq had some really good performance. I'm not sure if that was due to part with like Intel and a few other companies, the tech sector out there kind of driving this higher there, but they are definitely out in the lead here for the week. Now, jumping from there, covering the three main indexes, we're going to go ahead and cover the Roth IRA now. Now, as far as overall performance, this account is up 23.66% over the lifetime of the account. If we take just a look at the week here, we are actually kind of simmered at a 0.42% return for the week, having made roughly $76.34. And $3.55 of that was from sitting through a dividend that's going ex-dividend, and I am going to get paid out in the future $3.55 from some company. That'd be nice if you were to kind of highlight over this and to kind of show you what company is actually going to be paying you out in the future. Now, for the 1 week, if we go ahead and scroll down now, we'll kind of see what stocks perform really well, and we'll scroll down and see what stocks perform not so well. So Avery Dennison is up 7% here on the week, followed right behind by Caterpillar, which is actually, I see a lot of investors were surprised of this one, industrial. This one's getting really hammered due to the trade war between China and the US. But now with kind of China being in the US the last few weeks and potential trade deal, they have been kind of breaking higher. So this is up 5.67%. We did buy Caterpillar, I believe, a few weeks ago. So that definitely helped out the portfolio. And Las Vegas Sands there is our third place winner at 5.61%. So those three are my top winners of the week. Scrolling down to our top losers of the week, we have in third place AT&T, down 3.45%. But really, this is not bad. AT&T was in a pretty bad position, about $26, $27 a few months ago, and they're going through a lawsuit with a lot of investors blaming them for losing all their capital. Now AT&T has shot to some near new all-time highs here. This company is trading at $36. So that's nearly a $10 difference there in the course of just a year. Kimberly-Clark is our second place loser, down 3.59% there on the week. And our worst performer of the week is General Mills, down 3.81%. I would really like General Mills to continue falling even further. If we take a look at the performance of General Mills over the lifetime of this account, it is still positive, up 24%. So it would have to drop quite a bit for it to go negative in the account, but I would really like it because I would definitely like to add more capital into this position in order to get it to that $800 sort of value that I have set to get all of these positions up to. So those are my 3 winners, my 3 losers of the week. And we can kind of, if you'd like to kind of pause the video, take a look at the performance of the other companies within the portfolio for the week, and go ahead and do so as I go ahead and scroll through here. And then from here, we're going to go ahead and jump over into the activity. Now, I wanted to kind of cover some of the activity from back in September because we did not do our weekly recap. So we'll go ahead and punch in our September dates, the 1st of September through the 30th of September. If we take a look at just dividends alone, we'll see here that we got paid a ton of dividends from Pfizer, $4.13. We'll go ahead, I won't name these all off because when I'm watching other investors kind of name off every single holding that they receive dividends from, it just becomes a chore. So you guys can go ahead and pause the video, look at what companies actually paid out, and then I will give you the grand total here over on the spreadsheet that I have. So that's quite a bit of dividends right there alone for September. I updated this. So we received 16 different dividend payouts in the month of September. That means for every second day, I received some sort of dividend from a company for a grand total in September of $57.57. So without having to go out and work, I generated $57.57 from this account, and that's really good. This is in its second year of this account working for itself and kind of build it into itself. So just imagine in the next 5, 10, 15 years as you're getting ready to use the capital in this account, it will be generating monthly income of anywhere from $500 to $1,000 possibly in the future. Plus you have other accounts out there such as the 401ks, the Roth 401ks, you have your pensions, you have your Social Security, and it all kind of wraps together and helps you in your retirement phase. So those are the dividends for September. Now kind of going in and taking a look here at the dividends that paid out this month, we'll go ahead and punch in our current date. There we are. So the current dividends that we have received in the month of October, a little bit smaller list. We are ending October here fairly quickly, or fairly soon. Next week is our last week of October. So I'll be trying to do a 1 month recap for October, but here's a sneak peek. So far we have Kimberly-Clark, Altria, Cardinal Health, and 4 others. Now, really quickly, you can see here that their numbers are not going to be adding up to about $57, such as we did in September, but so far, from the numbers that I have added in, we've made $36.66, which is fairly nice for the month of October. I know a lot of investors, their 1, 4, 7, and 10th month of the year are generally their lowest. That is because there's not a large amount of companies that pay dividends in those months. So we have covered the dividends, we've covered the performance of the portfolio here over the last few days and months. If we go ahead and just look at the trading alone, I don't like that they changed this way of viewing it because now you can't visually see what companies you bought. You have to click into this. So on October 2nd, we have 3 buys. We don't know what they are until you click into them. And now you can see the AbbVie, Tanger Factory Outlet, and Eaton Vance were purchased back on October 2nd. Now, if you want to see how many shares of a specific company you bought, you have to click into it even more. And if you go into the escape or done, it kicks you all the way back. So if you kind of forgot where you were as far as what company or what day you were kind of looking at as far as what your buys were, it kind of messes you up there a little bit. So of course, on my spreadsheet, down towards the bottom, outside of kind of keeping track of my portfolio performance and shares and all the other information, down towards the bottom, I actually record my buys, what days I bought on the companies that I purchased, the shares, the cost basis, the current dividend that I purchased them with, and it shows my current return as of purchasing those shares. So since I purchased Tanger Factory Outlet back on the 9th of October, it has had a 18.97% return from when I purchased that company. And you can see the other performance of the companies there that I've bought in the live data there. If I go back in September, I have the exact same thing being shown here. All the performance of all my buys there for September and October. So back in October, we were buying up quite a bit of companies. Now this down 6.62. That is not too bad. I believe Simon Property Group, it's actually negative right now, but they've only been negative for a small amount of time, and I'm kind of excited because I don't have this position quite at $800, and it is offering me now that opportunity where it's in the negative, and I can average it down at a current yield of 5.4%. So this is my live data. So this information here right now is current. So this is actually pretty good, being able to buy into a REIT and get a starting yield of 5.4%. And this one's currently paying me out roughly $40 per year, or $9.60 per pay cycle per quarter. I lost the function to import the information from, I was using the NASDAQ website, but I went ahead and I asked on dividend.com, on Facebook groups of that tracks dividends, and it was Jason from Jason Investing channel. JMac Investing. JMac Investing helped me out. He went ahead and gave me some information that allows me to import from the Fiserv website. So here we can see that we've had a dividend increase. That is not an actual change. That's just probably some fractional change there that it's kind of noticing. So here we have Lockheed Martin that went from paying $8.80 per year per share to now $9.60. That's an 8.7% increase there. I didn't have to do. That's a higher increase per year than you will get at a position at work. So generally you'll get a 2-3% raise possibly at work to kind of keep you up with inflation. This is a nearly 9% raise from this company. Here down towards the bottom we have Eaton Vance giving us a nearly 7% raise there, from $1.40 per share to now $1.50 per share. I do have to find out how to import the ex-dividend dates, and the recording date's not so important, and the payment dates. I would really like to know when the companies are going ex-dividend, so I kind of plan my buys a little bit easier without having to go manually look up the ex-dividend dates. And I would also like to know when I would get paid from those specific companies. So that is currently where we are at with the portfolio. So I think we are doing really well. I really like the performance of this portfolio. We have produced over the last nearly 2 years. January will be 2 years. This portfolio has generated $629.39 of just straight dividends, and this is not including the current dividends of $36.66. So really we're about at $660 and some change of this account just kind of producing dividends, and our base investment sitting right around maybe 17,000. I think I'd have to this is not current, so this is something I'll update here towards the end of October. So that is it for today's video. That was covering the S&P 500 performance, the NASDAQ, and the Dow Jones performance over the past week. We also looked at our Roth IRA account performance over the past week. And we'll quickly look at the taxable count, but it just tracks the S&P 500 performance, and it's not anything major. So S&P 500 was up over the 5-day change 1.22. This is saying, but over on not Merrill Edge, M1 Finance, this is giving me a 1-week performance of 0.52. So maybe something's just slightly off here as far as how this is kind of tracking the weekly performance. So this is invested in just the S&P 500. So I should be getting roughly almost the same performance from the index by investing in this Vanguard S&P 500 fund. And this one does have some cash of $2.47. That is because this month on October 1st, the ETF paid out $2.47, which I will go ahead and reinvest that right now with you guys on this video by just punching in $10, which is our minimum buy. So it'll just kind of, that's the minimum you have to punch in there. And on the next buying cycle, it'll buy up to $2.47 of ticker symbol VOO into this account. So that is it for today's video. If you guys did enjoy this video, again, hit the like button below. Give it a big thumbs up. If you have any questions going over this account, the Roth IRA, stock market in general, let me know in the comment section below. And of course, if you have not yet subscribed, but enjoy the content, come back every week, or enjoy my videos, definitely hit that subscribe button below. I would appreciate you just kind of joining on and leaving some comments and all that fun stuff. So that is it for today's video. Thank you all for tuning in. I will see you next time. Have a great day. Bye.